Please note that World HD posts on social media may include statements concerning financial market trends and are based on current market conditions, which will fluctuate and may be superseded by subsequent market event. The investment strategies and broad themes discussed in World HD live streams, recordings, and social media posts may be unsuitable for certain investors depending on their specific investment objectives and financial situation. Information and data contained in posts and on live streams have been obtained from sources believed and checked to be reliable, but not guaranteed. You should note that the materials on the social media platforms are provided as is without any express or implied warranties. Past performance is not a guarantee of future results. All investments involve a degree of risk, including the risk of loss. Any comments made in the materials are opinions with no guarantee that any expressed course of events will actually transpire, and no compensation has been paid to any person providing a testimonial or comments.
Oh, say, Can you see by the dawn's early light? Oh, so proudly we hailed at the twilight's last gleaming, whose broad strides and bright stars through the perilous fight. Oh, the ramparts we walked were so gallantly streaming, and the rockets regular upon spur, singing out, yeah, through the night, that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free and the home of the
Good Monday morning. This is World HD, streaming live on Rumble, X, and YouTube every weekday at 8 a.m. Eastern Time. Today is Monday, November 17th, 2025. And boy, I was just looking in the chat. And first off, good morning, Trumpet, Rachel Hawk. Made it. Okay, good. Great. Glad you made it, Rachel. Awesome. Geo Rich, good morning. Then I saw Crash and Splash put in here that Tina Peters' health is deteriorating. And Owen Schroyer put her address up if anyone wants to send a letter. Wow, that's just, what a travesty. I mean, that poor lady, doing what's right and getting, just, a son that's served in the military and, I just, with great honors. And it's just, what a travesty on that whole situation. I just wish, I don't know, why can't she, okay. So we get this TZ guy, right, that gets a pardon. President Trump doesn't even know who he is, but he has to know who he is because he's, the developed Binance and some of these other things. He gets a pardon, and Tina Peters can't get a pardon for doing the right thing. I mean, that's just unbelievably frustrating. Prayers to Tina Peters. I don't know what that means or health. That's the first I'd heard of that. So thanks for putting that in there. So I'd say prayers to Tina Peters. And if you can, look that up. If you have that Crash and Splash, I don't know if you can pull that up, but, or if someone could put that post in here, it'd be great, write some letters or do whatever. I don't know what we need to do, but, somehow just shine a light on that as much as possible and complain because it's just terrible. Anyway, okay. With that in mind, let's get rolling here. We've got this stuff, I guess, kind of on that same front in a sense. This Epstein file thing came out the end of last week, and it brought in names that we've talked about in here a couple times. This guy, Larry Summers, was Treasury Secretary under Clinton. And look, they did some good things, right? They were the ones that bought back some debt, actually bought back some of our government debt. And one of the few who've done that. And they did a few other things, right? The problem is Larry Summers is he's got implications with Epstein and this other guy, Brock Pierce, right? Brock Pierce was a co-founder of Tether. Tether's questionable in a lot of different ways. There's a lot of things going on there. And this weekend, I was digging into that because there was a little chat with the Technocracy Roundtable, and someone mentioned Larry Summers, and I was like, this guy, I mean, he is such I don't know what the right word is. I'll just spare it. But just what we'll got to pull a clip. I got to pull a clip on this guy, right? Just so you can see. I mean, he's like the worst. But then he goes on to have he gets involved in the Trilateral Commission. He's now on the board of OpenAI. He was a National Economic Council advisor for the Obama administration. What else did we have on this guy? It's a ton of stuff, And so by going into this, it was great. I don't know how. I wish I knew how. We're still learning. I don't know. Maybe you guys. I'll speak for myself. I'm still learning how to use this AI and get the angle that I want, because I don't just want an encyclopedia to just spill out a bunch of stuff when I use it to look things up. But for example, this weekend I was doing some searching, and I was being tough on a couple different AI platforms. Like, look, in something there was actually a being tough on it, saying, look, I don't want that. I want it a little bit conspiratorial, because conspiracy's actually been right. So we need to look through and the thing, it's just funny how it responds. But the point is, I actually hit the mother load. I got this just huge data dump, and I have no idea what I did to get it. But it just, all of a sudden, it was like, it just unloaded all this stuff on, digital currencies and tokenization and the background on this, and it linked all the central banks around the world and all the different banks. And I mean, it wasn't messing around. I mean, it wasn't just U.S. banks. I mean, it just unloaded all these banks and all this stuff. And so I was just grabbing everything I could out of it, and then making notes next to it, and I mean, I couldn't stop. I mean, I was just plowing through this stuff, and I still have more to do on it, but a lot more. All it really does is just opens up more questions. 40-page data dump, and you're like, whoa. And so it was great from that perspective. And so again, it's nice when we see this stuff. And we'll see what comes out of this, right? I think Aaron Day is going to do some work on this with, Epstein and Brock Pierce, because Brock Pierce, obviously, that's going to be something that Aaron Day knows a lot about, or at least knows a background on that better than I do. But, and I think the way to do, and I've been thinking about, like, how do I take that much information and distill it down to usable things for us in here? Because to me, it's fascinating, but I'm not sure that we could just go through that. It would be pretty boring. It's like a documentary. And so I think the best way to do it is a timeline, and show, like, how these things came about. And it doesn't seem, and that's the other thing, when I was working with this AI, it wants to just, most of the time, it wants to just lay out facts. But what you want to do is I think what we want to be able to do is overlay these things, so you can actually see, like, okay, what were the central banks doing at this time? What brought this on? What was the event that brought this on? I've been saying for forever, the 2008 real estate crisis, like, we can point to 9/11, right? The Patriot Act. We can point to, the Gulf of Tonkin and, Vietnam. We can point to the Lusitania in World War II, right? We can point to, we can point to these, Pearl Harbor, right? World War II. We can point to these different things, World War I, Lusitania. Anyway, we can point to these different things, and you can see what was going on, and you can see the after, the fallout from it. It's a little bit harder doing it in real time. And we're getting better at this, right? Because it's forcing me to not just accept what, the mainstream media or the AI or search or whatever gives you. We're trying to overlay this stuff, right? We're trying to make this a little bit more complex in a good way. We're trying to make it more complex to make it simple, right? Because all we really want is, here's what happened, here's the result, and this, and then move through time, And so that's what I've got. I mean, I started putting this timeline together from this, going through, the white papers on Bitcoin, and we'll talk about Bitcoin today too, because obviously I don't know where it's at now, but it dropped below 100,000. I think it got down to like 95,000 or something like that. But go through that whole thing about how this thing came about, what was driving it, because when you do that, and I think it can be consolidated down into, the basics. And there won't be much lost. That's the key, is how do you, what's the right word? Bring this down to just the core guts, but not lose a lot of context behind it. And then, and then maybe like, I don't know, provide some command prompts if people want to research more. I've been thinking about how to do this. It's like, here's the basics. And then if you want more, here's a place to dig. If you want more, here's, and so maybe lay something out like that. Just trying to think about how to deliver this in the right way. And, we're working on this Technocracy Atlas, just basically starting on it with Aaron Day. He's getting this thing rolled out. And so I've given him a bunch of sources of things to feed it. Some economic data and economic knowledge and background and books and things like that we can load this thing up with and see what we get out of it, because it would be nice. It's nice to be on the end of being able to develop your own AI and know what goes into it. And for better or for worse, I don't know what that leads to. Maybe it'll be a flop, and you're like, oh, okay, well, it's a little harder than you think, But but I think it makes sense, right? You have to have good information in to get good information out, and so if you're putting this good information in, what's the goal? The goal is to have this AI be able to overlay this stuff somehow, right? To be able to go through that and do a much more sophisticated pull of trying to reconstruct things. You're trying to go back and reconstruct things with all these different parameters in mind, like multiple timelines. Boom, boom, boom. These are these 5 or 6 different things that are important. And at this point in time, look at that. This probably led to that. This probably led to this, and this probably led to that. And now you've got a story. Then you move on and you see, okay, what was the next step? Oh yeah, that makes sense, right? Now this would be a result of that. And then what did they do? And then you see the next move, and you can actually move through that. If you can get enough of these streams of information coming through, you can actually see like, oh, okay, we could put a story together around that. And that's the point. Like, it's filling the, connecting dots, right? And the more of these different things we can get, the more you can connect these dots. And you can reconstruct a story, not only reconstruct it, but based off the knowledge that we've gained since 2008. We've gained a lot of information since 2008. So now you go into it with that framework, and you can reconstruct that, and you can say, okay, what would we expect now? And where are we now? Is that right? And then if that's right, then what do we expect, 5 and 10 and 15 years from now, right? From all this stuff. So anyway, it's like looking back to gain an understanding, bringing it into the present, understanding what's going on, and then obviously trying to project it out in the future, because the reason to project it out in the future is because this digital currency is the tokenization, the process that they're going through is not an accident. Okay. It's not just, it's not an accident. Even though AI would like to tell you, well, this is a result of that and that and that, because it's one dimensional, right? It just goes down this one straight line of information. Instead of saying, look, when we look down these multiple data streams, there's no way this is just happening on its own. Okay. There's no way, right? It's not possible. You have this much coordination amongst central banks, bankers. It's just not possible. Right. And that's where I want to get to with this technocracy is, you get into this and then you almost get like overwhelmed by it. Sometimes you're like, wow, man, are we screwed? And then all of a sudden you say, and then you go about your day and, the sun rises and the sun sets and the world spins around, and, you go through another day and the markets open, they close, and you're like, is it really that bad? And you just move on, and so, and I think the healthy place to be is not so much, going through this overwhelm and then, normal overwhelm when you get these, but to be able to get some sort of a consistent approach and then be able to do something about it, right? That's the key is, what can we do about it? That's what I think what we ultimately all want is, what do you do with all this information and what can we do about it? And I think we'll see, I put together as a follow-up to our Friday show on the cattle, on the ranchers, and then so you got the ranchers on one side, you got the consumer on the other end, and then you have these meat packers in the middle that are controlling 80 to 85% of the market. And they dictate, they can manipulate prices for the ranchers. And I saw this firsthand, right? When I was doing a cattle farming operation out in Nebraska, helping out with it and doing a lot of the modeling for it, I saw how the markets, the guy that I was working with, not my favorite person, but nonetheless, he figured out a way to report cattle in Nebraska when really only Texas was reporting that time of year. And so he made the markets go crazy. Well, he had already positioned his clients for this, and then he reported the data. So in a sense, he manipulated the market. But the problem is what he really did was he just called out. He just basically figured out how the system worked. And he was like, screw this. Why can't we report Nebraska too? So he reported, and all of a sudden the exchanges went crazy in the middle of the summer, and it created this big stir in the markets. And his clients profited, significantly. And then he got caught in a 2-year lawsuit, and I got to see the lawsuit firsthand, right? I got to watch the whole process. He would be like, Craig, you got to read this. You got to read this. Tell me what you think. So I'm combing through these legal papers, giving him my thoughts on it and so forth. And so I got to see this firsthand, a big, in the end, he sort of got off the hook, $1 million in legal fines or legal costs, and I think like a $25,000 speculation violation limit. Anyway, you get to see this stuff firsthand, and you see how these meat packers are playing this game, right? So I have a little bit different angle on that whole thing, and and that my point of bringing that up is, if Aaron wants to move forward with this, and we might do it tonight, right, on ag, because we've got enough information to do it, at least, because I don't think it's going to be a one and done. I think it's going to take multiple times. And here's the thing, there's a solution behind this, right? And it goes back to Zano, and it goes back to this freedom dollar. And and I'm using the trucker rally in Canada in mindset. It's like they had definitely had a play there. They knew what they were doing. Okay, they made a stand. It finally got broken down by Chrystia Freeland and Trudeau and all those knuckleheads up there. And if you had been if the way that they ultimately did it was Chrystia Freeland, who was a globalist, right, World Economic Forum, was up for prime ministers of Canada with Trudeau, with Polivier, with, Carney, with this whole group of people. She was one of the candidates there. Which what she did, I forget what she was, like finance. She had a position underneath Trudeau, some finance position. And she's also the one that negotiated USMCA for Canada under Trump 1.0. But anyway, she's the one that came in and shut down their bank accounts, right, after the trucker rally. So really pounded on them, and we saw them go through with the horses and arresting these people and so forth, breaking it up. But if you can stop that from happening where they can seize your bank account, then all of a sudden it's game on. It changes things. Okay. So anyway, I just wanted to go through this Epstein thing. There's going to be more on this, and then Congress is going to vote to release. Again, we just go round and round. Are we going to get it out there or not? And this goes back to, the CIA director Ratliff. He came in I think it was under Trump 1.0 when he had, the position of director of all branches of security, FBI, CIA, all of them, right? The NSA. When he was in charge of all that, he said, there's no way we can ever let these Epstein files out because it's going to be a, national security issue. Well, are we ever going to see this stuff? And, anyway, I don't want to go into that because that'll get covered nonstop, and we'll just see how it all unfolds. Okay. Let's jump into some of this economic data. I don't know why I don't. Anyway, okay, I think we're good. Let me do this. Perfect. Okay. All right, so let's take a look at this stuff. So for this week, here's the big takeaway. We've got a little bit of data today, Canadian CPI. I just want to watch this because obviously Canada's our neighbors to the north, and they're struggling. And are they carrying through this inflation that the world's so concerned with? We see mixed results. Sometimes we see, move down in inflation. Sometimes we see in certain countries move up in inflation. It's hard to depict a trend here. But a lot of people keep thinking that, rolling into this next year, we're going to see the tariffs are going to have an impact on inflation, and it's going to continue. We're going to take a look at a couple clips from Scott Bessent today that say otherwise. Okay, he's saying otherwise. All right, so I'll leave it at that, right? Just trying to keep an eye on the CPI. Then we get Empire State Manufacturing. Remember, this has been a good one for us. This has been a good indicator. Keeping an eye on this manufacturing, okay? We've been seeing that play out over the last month or so. And again, connecting this with the Russell 2000 index and small to medium-sized business, in this manufacturing space. Okay. Are we seeing more stuff coming back, more manufacturing? Are we seeing any signs of it showing up and we're getting more manufacturing base back in the United States? It's been outsourced around the world a lot because of these tariffs and so forth. And the, the deindustrializing the U.S. Okay. And then we get then housing. Okay, so we get quite a bit of housing data this week. We get housing data today. We get housing data tomorrow with NAHB Housing Market Index. And then on Wednesday, we get U.S. building permits. We get U.S. housing starts. And then we get on Thursday, we get existing home sales. So I think this week is really, we're going to get non-farm payroll, right? We're going to play catch up on Thursday with, I think it's Thursday. Yeah, U.S. jobs data is on Thursday. So we're going to play catch up on that. That's going to be interesting to see how that unravels, because are we going to get November data or October data, or are we going to just skip that and do, again, this has been a talk, and I don't know what, I haven't heard clearly yet what we're going to get, okay, on Thursday with the jobs data. So that's obviously a big number. And so is we also have what else do we have in here? I thought we had a PMI. Oh, yeah. On Friday, we get U.S. flash manufacturing PMI. So those two can be big data points, okay? The U.S. jobs data on Thursday and the U.S. flash manufacturing PMI on Friday. But other than that, I think the real theme of this week is the housing data, okay? We're starting to get this housing data come through, and we have like 4 or 5 data points. There's so much we can do on that stuff. But we'll update the housing stuff, try to get caught up on that. Look back at the chart, see what we get. Are we going to miss housing data? Are we going to get that filled in for October? Or are we going to miss a month? Okay, are we going to have a gap in the data? I don't know. We're going to have to wait and see what we actually get as we get closer to these housing data points, and see if we can get a theme from this. Because we heard about the 50-year mortgage, we heard about these transportable mortgages. And again, these things are coming up all around this affordability idea. And what are we talking about here with affordability? We're talking about food prices, shelter, fuel costs, these kind of things that people, they can't get away from. This inflationary force that we know has been there, okay, really since President Trump left office last time and Biden came in. We saw that huge spike up in the inflation. All right. So that's the real takeaway from this week, I think. And then, so let's keep rolling here. Let's take a look at this. We've got economic data for today. There's that Canadian CPI expected at 0.2%. Foreign security purchases out of Canada, $25.92 billion. I just want to see if there's any hit on that. It's not a big data point, but it is kind of interesting to see, are they purchasing foreign securities? How much trouble is Canada in? We don't know, but their situation isn't good. Let's see if it shows up other places. Okay, and then we get this Empire State Manufacturing Index expected at 6.1, out at 830. We'll probably take a look at that. And then 9 o'clock, it's 9 o'clock, I think it's 9 and 9:45. We get 2 FOMC speakers. That theme continues. That was our big theme from last week. Every single day last week, we had FOMC speakers. I think one of the days, Wednesday or Thursday, we had like 6 of them. So it was a stacked deal. This week, today we get a couple more. We get this Williams and Jefferson, right? And then later today, we're going to get Waller is going to be out speaking. Christopher Waller is one of the guys that was up for this Fed, the next Fed chair to replace Jerome Powell. I don't know if he's still in the running or not. We'll see. And that should be coming soon. I would expect we're going to get, in the next week or two, I wouldn't be surprised if we don't hear more rumblings of maybe even a selection of who is going to be the Fed chair. Okay, and then at 10 o'clock, we get the construction spending. So we'll look at that. We'll take a look at that one tomorrow. And I'll see if I can't put the housing data together for next week. Okay, and what did I have for a note? Oh, yeah, I know what I was going to pull. Okay, headlines for today. Let's take a look at this. So economic data is back. That's what we've been talking about. So we've got our economic data back, and for better or for worse, I kind of liked it without the economic data myself, but it's just less to worry about because you don't have these points of volatility where you got a great position going, then all of a sudden wham, and now you've got to think like, oh man, that didn't go well, or sometimes it goes your way, sometimes it doesn't. It feels like, I think the way it feels is it feels like it's 80% it doesn't go your way and 20% it does, even though I know it's probably 50-50, but it's extra stress, that I kind of enjoyed not having for the last 6 weeks with the economic data. Okay. The FOMC consensus underway. That's what we were talking about. All those speakers last week, speakers this week. What do we know on this? Okay, we know that that we were at 100% at the last Fed meeting. Coming off the last Fed meeting, it was 100% chance of a 25 basis point rate cut in December. Now it's down to 43% chance. Okay, so remember, we have Schmidt, we have Moran, we have these guys on polar opposites, and then we have the people, in the Fed FOMC members in the middle. And that's what we're looking for, is that consensus in the middle. Where are they shifting? Well, right now they're shifting more towards Schmidt, no rate cuts, or less of a chance of rate cuts. Moran's not only calling for 25, he's calling for 50. Right? We know the administration wants 50. We hear Rick Reeder of BlackRock, who's up for the Fed chair, talking about, he maybe isn't talking about 50 basis point rate cut in December, but he's talking about 3% or less. Okay, why is that? Back to housing, right? This would help invigorate housing. Housing's a big part of the consumer. The consumer, the U.S. consumer, what drives the U.S. consumption? A lot of it revolves around housing. Okay, and all right. So the Fed speaker's housing data and the delayed jobs report. So I think we got all those. Okay. And then we've got, this is one that just popped this morning. This is interesting. Not much of a story here yet, but it is. Oh, one other thing I wanted to mention is earnings this week. We do have Home Depot. I had a little still on that, but we don't need to show that. Home Depot's out, Target's out, and Walmart. So again, this goes back to the consumer. The home building with Home Depot, obviously Target, with pre-holiday sales, and just how are they doing in general. And look, and then Walmart. A lot of people hate Target and Walmart, and I get it. You know what I mean? They're obviously, controlled entities to some extent. We saw how much of a role Target played with all the uprisings in Minnesota, and then obviously we have Walmart, right? A globalist mindset, but the key is these three are going to give us a look this week on the consumer and how the consumer is holding up. And then we get the big one this week, the 19th, which is Wednesday, 17th, 18th, 19th. So that's Wednesday or Thursday. We're going to get NVIDIA. And that's a big one. Now, a couple of the things we saw last week, SoftBank, okay, Masa-san, dumping all of his NVIDIA stock. Now, he did that once before, and he wishes he hadn't. He would have made $230 billion by holding onto NVIDIA and not getting rid of it. Nonetheless, he dumped his $6 billion stake in NVIDIA for all of it, okay, for this whole Stargate deal, with Oracle, Larry Ellison, and that whole group. Okay, now we also see Peter Thiel's macro fund. They sold all of their NVIDIA as well. So we're seeing a couple people dumping, all of their NVIDIA. Do they know something or not? Or are they just freeing up capital for other things? Are they just taking a little bit off the table? We've seen this, since Palantir's earnings came out, we've kind of seen a hit on this tech space, the big tech. And so is that going to continue with NVIDIA this week? That's a big thing. If NVIDIA doesn't excite the markets, they don't have to miss. They just have to not beat by this massive. At some point the bar gets so high, they have to beat, but not only just beat, they have to beat by a lot, right? If they don't beat by a lot, then they get hammered, and so that's the spot we're at. And we saw this last week with Cisco. I was talking about the Cisco earnings on Friday, I think it was, where they were out, and they so we're actually at 8:30 here. We'll see if we've got any. I'll just put this data up here to see if we've got anything coming out on. Okay, but thinking about this on the on Cisco, remember I was saying they just eked out an earnings beat and they eked out a revenue beat. To me, that's a red flag that they're massaging those earnings, okay, and that they're susceptible to a hit, and that might be, is that indicative of what's going on the tech space? Okay, so let's take a look at this while we're at it. Whoops, here we go. Okay, this is what we wanted to see. All right, so we can see this Canadian CPI coming out. It came out right where expected. It was expected at 0.2, came in at 0.2. Year over year, slightly higher. It was expected at 2.1, came in at 2.2. And this is all out of Canada. So we won't look at all the details on this. I don't think we need to see all that. Okay. Yeah, no big deal there. Okay, Empire Manufacturing. 18.7 versus 5.8. So it was above all estimates. So that's good news. That's what we're looking to see, right? Is this manufacturing coming around, and it looks like maybe it is. That's I don't know if it is or not, but that's a good sign, right? That's the kind of number we want to see, and I think that does it for us. Okay, I think we're kind of caught up on that stuff. All right, perfect. All right, so let's see. I think we're good there. This is something that came out right before we were ready to come on, and this is UBS, right? This is a Swiss bank. And they, there's a lot of ties back to UBS. UBS has been in trouble a lot, with nefarious things. It's like all these banks, right? If they can pay $100 million fine, but make, $5 billion, they're going to do it over and over and over again, right? And they never get in trouble. No one ever goes to jail and so forth. So UBS is notorious for this kind of stuff. They do a lot of private wealth stuff. They're, a lot of global private wealth people have their money at UBS. And it's, tightly associated with Switzerland. But here's the thing. Apparently, the chair of UBS and Besant were privately in a private meeting talking about moving the bank to the U.S. Now, what's the reason? I'm not sure. Again, it's a quote unquote private meeting. So I wasn't in the private meeting, but, somehow it got leaked, right? So, what, or maybe it was, I don't know when the meeting was held. Maybe it was held and then now it got released that they actually had this meeting and they're disclosing it. The point is this, that this is based around new capital requirements, and it would force UBS to hold like $26 billion in additional capital. So this is pretty fascinating. This goes back to the Swiss franc. It goes back to, moving banking centers to the U.S. This is going to be an interesting one to watch and see what's behind this, because that's a big deal to just say, yeah, we're taking UBS, which is, linked at the hip with Switzerland, and we're just going to move the thing to the U.S. Okay. I don't know what's behind this, right? But I want to stay on this and see. Okay. So that's all I know about it at this point. All right. And then back to affordability. Let me see. Yeah. Affordability is front and center for us, especially as we go into the holidays, right? Housing, consumer, how's everybody doing here? And we covered this beef industry on Friday, but here was Besant getting questioned on this. We're going to run a couple clips with Scott Besant, but he's talking about beef, and they say, this is, just listen in here where he says, a lot of the migrants, the illegal immigration, he said some of these people brought their cattle with them. Like, that's just weird. Like, I don't know what he's talking. I'd like to get your opinions on this. Like, what does he mean by this? Like, this is weird. But here it is. This is kind of, follow through on what we talked about on Friday and the affordability. But listen to this, brought their cattle with them.
But what is your take on what you just heard? He's expecting $10 meat.
Well, Maria, the beef market is a very specialized market. It goes in long cycles, and this is the perfect storm. Again, something we inherited, and there's also, because of the mass immigration, a disease that we've been rid of in North America, made its way up through South America. As these migrants, they brought some of their cattle with them. So part of the problem is we've had to shut the border to Mexican beef because of this disease called the screwworm. So we're not going to let that get into our supply chain. And again, I don't want to focus on one product. It's a very important product, and we are laser focused on this issue. And
okay. So yeah, if you have any comments on that, like, what does he mean? Maybe it's just misspeaking, right? I mean, he speaks all the time. Maybe it was just misspeaking, but that is just weird, right? Brought their cattle with them. It's like, I mean, you're talking about the Darien Gap, you're moving through there, maybe he's just talking about Mexico, bringing some across the border. Maybe he's, talking about people took it. I don't know what he's talking about there, but it's just, that's a weird comment. But if you have any thoughts on that, that's great. And I did see in here some people, it looked like Rachel had talked about Trump can't pardon her. It's a state, not federal. But can he still give her another? What's the other thing? It's not a pardon. We use pardon as like a generic term, but there's different ones. Like he could, I thought he could step in and still, I forget what it's called. I think it starts with a C. It's something where he can commute her. There's something else. Anyway, I think there's a way that he can still step in but Anyway, maybe I'm wrong on that. Who knows? Nonetheless, thanks for putting the link in here because it's great. I mean, anything anybody can do to try to help that poor lady out, it'd be fantastic. Okay, let's see. Sven, NVIDIA earnings Wednesday could also affect them. Yeah, for sure. Could also for sure affect the market. Rachel, no target. Cattle, nothing's okay. Osvilla, immigrants bring their cattle is an expression. We import Mexican beef through the Santa Teresa port of entry. Check it out on Google Earth. Okay, this is interesting. So what is immigrants bring their cattle is an expression. We import Mexican beef through the Santa Teresa port of entry. Check it out on, okay, well, good. Thanks for that, Oz. We'll check that out. You know, it's probably another lion distraction. Okay. The stockyards are just east of the port. All right. Well, that's good information, Oz. Thanks for providing that. I'm going to look into that today. Anything else you have on it's great, right? If you can help direct us, but that gives us a lot of direction right there. But thanks for that. I appreciate that because that was weird. And it's like, you know, when things are weird like that, you just kind of want to know, like, what does he mean by that? Now we know. So thanks for that. Any other direction would be super, super great. Okay. So here he is again, back on the affordability and affordability through growth, right? And here's what he's saying is that this is really the way that I'm not sure that I fully buy this, but I get what he's saying. You know, that it's really the way we're going to get affordability is through growth. And he expects these things to come together in Q1 and Q2 of 2026. This is what we're waiting for. And boy, you could go down the whole rate cut thing and, you know, what's going to happen in January, February, March with rates and so forth. And how much do rates even matter at this? They do matter. Okay. It is going to matter to get, and I think that's what the administration's saying. I think that's what Moran is saying. Let's just get these things back down to like 3%, 2.5% to 3%. And then let's try to work on the growth, right? Let's work on other things. Let's just get that down, get it out of the way, right? Get it to the point where there's a little bit of yield for fixed income earners. There's a little bit of yield for pensions. But then let's get it down to the point where we can work on the economy. Okay. Right now, I think what they're saying is it's too high for us to do these other things that we need to do and restructure some of the debt. Okay. Because again, we have to get these rates down means that we get to slowly over time restructure this debt and we don't fall off a cliff in terms of interest on the debt. And I'm going to run a clip here on debt, where debt comes from. This is a pretty interesting story on the debt. So I'm going to run that here in a minute. But here's Scott Bessent talking about that.
The cost of living, Maria, is two parts. So we inherited this terrible inflation. We are flattening it out. I believe we're going to push it down. Energy prices are down. Interest rates are down. But the real thing that is going to happen that is going to give Americans real purchasing power increases. You know, it's going to be through growth. We passed the one big, beautiful bill. I am also the IRS commissioner, and I can see that working Americans, thanks to the president living up to his campaign promises, no tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. If you buy an American car, there are going to be substantial refunds in the first quarter of 26. Working Americans will change their withholding, and they will get a bump up in their real incomes. So I would expect in the first 2 quarters, we are going to see the inflation curve bend down and the real income curve substantially accelerate. And when those two lines cross, Americans are going to feel it. But Maria, I will tell you what we're not going to do. What we're not going to do is tell the American people that they don't know how they're feeling, which is what the Biden administration did. You know, they said it was a vibe session. You don't know how good you have it.
Okay, so again, trying to get affordability, bring prices down, trying to bring incomes up. And again, what's at the core of that? Trying to get a stable interest rate that corporations can work with and we can live with, right? People can buy new cars, they can, move about in their housing. Do we get this transportable mortgage? Think about how great that would be if you could transport your 4% or 3.75 whatever mortgage and get a lower interest rate that's, I don't know, say 5% or something. It would create mobility in people buying and selling homes. The problem is I'm not sure it would bring the cost down, okay? Not sure that, and that's why we want to keep this housing stuff in mind. All right, here's Scott Bessent talking about prosperity, right? That Wall Street and Main Street can both do well. the here's his take on it.
How long will that take?
I think we are going to see a substantial acceleration in the economy in the second quarter. And I think we are also, we're already seeing on many prices, as I said, we're bending that curve down, and the increase in real incomes, I think Americans are going to feel it in the first quarter, second quarter. I think 2026, thanks to President Trump's signature plans, is going to be a great year for working Americans, for the markets. I call it parallel prosperity. Main Street and Wall Street can both do great, but I think Main Street's going to have a great year in 2026.
Did the
So that's what we're all hoping for. But just remember the disparity, right? The 1% owns 50% of stocks, and the 50% of lower income earners own 1%. So at some point that has to be remedied, right? It would be much better to grow out of this and make sure that we build a set of structures that allows that to happen, not force it to happen, not redistribution of wealth, right? Unless people are crooked, again, if people have been crooked and they've stolen that money nefariously, then obviously the problem is then you put it back in the hands of government and then it doesn't get distributed. It's a train wreck. Okay. But somehow, we know how to do this. We're not there yet, right? It's going to take a while until you need to level the playing field, right? And it hasn't been fair. And you have to have a judicial system that's fair and honest and holds people accountable, because again, the few have been allowed to. The same thing I was talking about at the beginning. When we talk about this cryptocurrency, digital currency, central banks, big banks, all this coordinated planning that's going on, along with the technocracy, along with tokenization, along with all these things that we have to cover, this stuff is not happening on its own. It's not an accident. This isn't capitalism. Some of it's capitalism. The beauty will be if capitalism can actually, find a way to beat this stuff that's going on, right? The rigged system, if capitalism can actually beat the rigging, that would be a beautiful thing, right? That would prove, that it is. As long as it doesn't go into the hands of the few, continuing going into the hands of the few, okay, that's the problem, and that everyone gets a fair chance, and again, not easy, but doable. Okay, all right, so next thing I want to talk about is this, quickly. U.S. and China have yet to agree on these rare earths. So again, a couple weeks ago, President Trump goes to Asia, he goes to, Kuala Lumpur, goes to Japan, goes to South Korea, meets with Xi. Two big things come out of that meeting, and both of these things are flaring up now. He meets with Sanae Takaichi, the new prime minister of Japan, follows in the footsteps of Shinzo Abe, okay, a good friend of President Trump's. He says it all the time. Every time he talks about Japan, he always brings up Shinzo Abe, his great friend, how great of a guy he was. He was assassinated, and he talks about how tragic it was and so forth. Then you get this Sanae Takaichi, okay, it was questionable whether she was going to get in. There were a lot of political turmoil to get her in there, but now she's in there. And so a couple key things, just keep that in mind as we go through this, because I think these are two important things that came out of that Asian trip. And this week we also have Mohammed bin Salman coming to the White House. Again, this is a follow-up to the trip that President Trump took to the Middle East, to Qatar, Saudi Arabia, United Arab Emirates. And Mohammed bin Salman is going to be at the White House this week looking to make sure that these deals are going through, and talking about these NVIDIA chips and talking about other things, okay? And again, on the oil front, maybe it'll come on Wednesday. Who knows when they're meeting this week. We'll be able to talk about it on Energy Day. President Trump wants to bring oil prices down for inflation, but he can only bring them down so far, because if he brings them down too far, then the Saudis, the Qatar, the United Arab Emirates, even Kuwait can't make money by pulling oil out of the ground, refining it, sending it off, moving it around, whatever. And so what are they going to do? They're going to flare up. They're going to create proxy wars. They're going to help, create unrest. Why? Because unrest then brings up oil prices. So it's a fine line they're walking here with oversupplying the market. That's why we see this crude oil market hanging out below the 63.18, is because it's oversupplied. And they want it that way, to bring these inflation prices down and put more and more on the market. And there's a little bit of a rearrangement that's going on there. But back to the point. Okay, the point is That was that Middle Eastern trip. Then we had this Asian trip. What's the fallout from this Asian trip? Two things. The rare earth metals, that was front and center, okay? Jameson Greer's on his way back to negotiate this thing again. It's not done. As we suspected, as we figured, the China deal seems far from over. We negotiate this over and over and over again, right? Is it really done this time or not? Okay. They opened up the ability to, it looked like it was moving. What's going on with the soybeans? Are they really buying the soybeans? Maybe we'll take a look at the soybean chart here in a minute and see, again, it got up to where it should. I would expect the soybeans to come off a little bit. Before we haven't changed trend, and soybeans are still trending down, even though we did get that bump up in soybeans. What really happened with China? It was just too easy. 3-hour meeting, was only an hour and 47 minutes. Scott Bessent was the one who negotiated a lot of that before President Trump went there. Now Jameson Greer's having to go back and try to get this thing structured. And the thing is, it seems like it's being signaled that the deal is just not there yet, okay? This has a big impact on military, a big impact on autos, a lot of other industries, we talk about. China has a stranglehold on this, okay? And here's the thing, why no one gets arrested for letting this happen to our defense industry, I don't know, right? We have this CFIUS, where you're supposed to be, that's a whole can of worms, but we have groups that monitor this stuff, okay? Like, why would we let a company be moved out? Why would we let a company come into the U.S.? All right. And they're supposed to be monitoring these things. We saw a massive outflow. I mean, who allowed this rare earth metals to get this imbalanced? That's the question. And whoever that is should be questioned and to see, did their bank account go up as a result of this? Okay. Are they richer? Are they significantly richer now? Okay. After having been involved in allowing these rare earth minerals to only end up in China. So you got to link it back, okay? But then you got to find out, whoever was in charge of that, anybody around that sphere, are they significantly richer? And does it look like it came from anything to do with that? Like, that would be a great place to start on leveling the playing field, all right? But how do we let this get that imbalanced? This is not that complicated, right? Anybody can realize this. It's kind of like if you're a farmer, it's like, okay, do we have fertilizer? If we don't have fertilizer, we got to figure out a way to get fertilizer. Do we have seeds? Okay, we need seeds. All right. Do we have water? Okay, great. Do we have, insect control? Do we have, like any minimal amount of, herbicides or whatever we need to put on this stuff, fungicides and things like, do we have these things? Okay, great. I mean, this is kind of an important thing for our military. Do we have these rare earth minerals? No, it's all in the hands of China. Like, somebody wasn't doing their job here. And if they've been enriched, that's a great place to start, to fry them. Okay. For doing that. All right. So again, Jameson Greer is going to be over there. We're going to go round and round and round on this thing as suspected. This is just how it seems to always work with China. And again, who is China, right? We've tried to cover that and hopefully I think people can fill the gaps on that. It's like, are we really separate entities or is this just a game that we're playing? Okay. This is for the technocracy space. Okay, now we also know that Argentina, right, is a key ally on these rare earths. And this is probably a big reason why we've been defending them, giving them $20 billion in currency swaps to help, prop up their peso, okay, their Argentinian peso, and trying to give them $20 billion in credit facilities to U.S. banks, okay? So again, and we know that the South America, there's a lot of influence down there from an agricultural perspective. We talked about that many times. Okay, now this is part of the fallout from that Asian trip as well. Tensions increasing between China and Taiwan and Japan. Right, so this is that Japanese Prime Minister Sanae Takaichi facing her first major diplomatic test less than a month in office after angering China with remarks about Tokyo's position on the red line issues with Taiwan. So she became the first sitting Japanese leader in decades to publicly link the Taiwan Strait crisis with the possible deployment of Japanese troops. This led to Beijing unleashing a flurry of economic reprisals and threats of more retribution. So China's foreign ministry spokesperson Mao Ning was up the demand for Takaichi to retract these claims, saying there was no space for ambiguity over the self-ruled island that Beijing considers its territory, which is Taiwan. So Taiwan's really not self-ruled, okay? It's got a lot of overhang from China and it has a lot of overhang from the U.S. So it's clearly a battleground. And remember, President Trump had that comment to Takaichi. It was that creepy. I should have pulled it out, but I still have it. But it had a focus up on his face. But he said to Sane Takaichi, anything that you need, you just give us a call. We'll have your back on anything you need. So is this what he's referring to? Or is the West using Japan to probe China and get them stirred up? Jameson Greer is going to negotiate these rare earth metals. Is this stuff connected? Okay. Is all this connected? Is this that, the kind of a swarm impact, swarm effect on China? Send in Japan, send in Korea, send in the U.S., send in Vietnam, let's see what happens out of this whole thing. Let's see what kind of pressure that Australia, can't forget them. What's going to happen out of this whole thing? Now, here's the situation with this, right? So far, Takaichi has she's hit the red button, okay, but she's refused to retract her statements. Now, this isn't looking like she's planning to back down. And, how much does President Trump get involved in this? How much does the U.S. get involved in this? We have big military bases in Japan. Okay. Could this trigger a military response? Beijing's prepared for economic retaliation for sure. Okay. So the words start flying, and that leads to a response of military level retaliation. And that's where we're at with Japan and China at this point. Okay. And so, this is what we've been talking about with that whole Asian rim. If you look at the map, I don't know, I'll just add this context to it. If you look at the map, to me, it feels like Japan is way up there to the north, right? And then you have Korea, and then you have, China way down to the south, and you have Taiwan and Australia further south. But when you really look at a map, for me, it's distorting because they're actually a lot tighter than you think. And we know that North Korea gets used as a proxy to fire missiles over Japan to keep them on edge. We know who's doing that, right? It's mostly China more than likely, right? Maybe a little bit of Russia, but what interest does Russia have? So North Korea is probably funded by China and Russia as a proxy state. Yeah, that's where they get their nuclear capabilities and all the other, the other things that give North Korea a standing. Yet, if you look at North Korea on a light map at night, there's nothing going on there. So economically, there's nothing going on good, right, in North Korea. Yet they have all these capabilities to be a proxy. Again, the few leaders get a fortune, right, and then everybody else is poor as can be and probably half starving to death. But what do? They're firing missiles over Japan. So China fires missiles over Japan to keep them in check, using North Korea more than likely, right? And then now we see Takaichi pushing back, and who's going to have her back on this? It's probably going to be the U.S. And the question is, what does this bring in? How strategically can they navigate this with Russia, with China, with North Korea, with Japan, with Taiwan? There's a lot going on in that whole Asian region. All right. So again, this is a lot of what I think that trip in the Asia was about, was standing ground. Okay. So you can call it what you want. You can call it soybeans. You can call it rare earth minerals, and they're important. Okay. But I think a lot of it was a defense, and this is that hidden agenda that I kept talking about. There's that it's the elephant in the room is the defense perspective, and they danced around it. I guess is the point. They danced around it. Now they're not dancing around it anymore. Now they're dancing on it. Okay, with Sane Takaichi. Okay. All right. And so what we'll be watching out of that is, the yen. Keep an eye on the yen. South Korea has a decent currency. Maybe I'll start bringing that up too. I need to start watching that again, see if there's anything going on in that. Okay, so tensions flare between Japan and China. We did that. Okay, then Bitcoin loses all of its 2025 gains. What I want to do is set up these charts, but I want to also run this debt. I'll probably run this again because I just think it's a really good background on debt. Someone in here asked, it's been a couple months, someone asked in here a great question, like who really holds all the, like, who do we owe? Okay, when we say, we have 38 trillion in debt. Okay, now we know with unfunded liabilities, 100 trillion in unfunded liabilities, Social Security, Medicare, Medicaid, all these things that we've made promises for, and we don't really have the money in there to pay them. Those are unfunded liabilities, right? Those are promises that have been made. They're going to be hard to be kept. All right. Now, who owns this debt, though? This is pretty interesting. And then what we'll do is we'll come back and take a look at some of these charts. But I think this is a great clip. I'll run this one again and again because I think it's worth it.
Every country on earth is in debt The United States owes $38 trillion. Japan owes $9 trillion. The entire planet owes $315 trillion, 3 times the size of the global economy. But here's the paradox that should terrify you. If everyone owes money, who exactly is owed? The answer isn't what you think. Because when you follow the chain of creditors, when you track who actually holds the debt, you discover something disturbing. The world doesn't owe money to anyone in particular. It owes money to itself. But 4 men, 4 bankers across 3 centuries, designed it that way, deliberately. They built a system where debt can never be repaid, where governments borrow forever, where interest flows eternally upward, and where the people who designed the trap profit from every payment, every crisis, every bailout. This isn't conspiracy. This is documented history. The meetings happened, the contracts exist, the mechanisms are public record. And once you see how they built it, you'll understand why $38 trillion isn't a problem to be solved. It's the system working exactly as designed. Let me show you the 4 architects, the 4 moments when the debt trap was engineered, and why every government on earth is now caught inside it with no way out. Before 1694, kings borrowed money the old way. They'd go to merchants or nobles, promise repayment with interest, and if they couldn't pay, they'd default. Creditors lost money. Kings borrowed from someone else. It was risky for lenders and embarrassing for kings, but it was contained. Debt was temporary, either repaid or defaulted. The system cleared. William Paterson changed everything. He was a Scottish merchant and financial schemer who tried and failed multiple times to get rich. In 1691, he had an idea that would reshape civilization. England was at war with France. King William III needed money desperately. The treasury was empty. Tax revenue couldn't cover war costs. And traditional lenders were refusing new loans because England had defaulted before. Paterson approached the king with a proposal. He would organize a group of wealthy merchants to lend the government £1.2 million. That's about $300 million in today's money. A massive sum. But here's the innovation. The loan would never be repaid. Instead, the government would pay interest forever, 8% annually. And to manage this arrangement, Paterson proposed creating a new institution, the Bank of England. The mechanics were revolutionary. The merchant lenders would give their gold to the Bank of England. The bank would lend it to the government. The government would pay interest annually from tax revenue. And the bank would pay that interest to the merchant lenders. But here's the critical detail. The government wouldn't repay the principal, ever. The loan was permanent. Why would merchants accept this? Because the interest payment was guaranteed by Parliament. It was backed by the government's taxing power. As long as England could tax its citizens, the interest would flow. And the banknotes the lenders received in exchange for their gold could be traded. They were as good as money, better than money, because they paid interest. Parliament approved Paterson's scheme in 1694. The Bank of England was chartered. The merchants provided their gold. The government got its war funding. And for the first time in history, national debt became permanent. Not a problem to solve, a feature of the system. And here's what nobody explains about why this was brilliant for the bankers. The government paid 8% interest annually on £1.2 million. That's £96,000 per year, forever. The merchants had essentially bought an annuity from the government. As long as England existed, as long as it could tax, the money flowed. And if they wanted their gold back, they could sell the banknotes to someone else. The debt was transferable but never repayable. But Paterson's real genius was what came next. The Bank of England was given the right to issue banknotes backed by the government's debt. They could print paper money up to the value of the loan. This created money out of debt. The government's IOU became currency. And the more the government borrowed, the more money could be created. This is the template. Government borrows, never repays principal, pays interest forever, and the debt itself becomes money. It's brilliant if you're a banker, catastrophic if you're a taxpayer, because you're paying interest on debt that will never disappear. Within 50 years, every major European power copied the model. France created the Banque Générale. The Netherlands already had sophisticated banking, but formalized government debt issuance. And by 1790, the newly independent United States adopted the same system. Alexander Hamilton, who we talked about before, explicitly modeled America's financial system on the Bank of England: permanent debt, interest paid from taxes, bonds traded as currency. Paterson died in 1719, not particularly wealthy, despite creating the Bank of England. But the system he built persists 331 years later. The Bank of England still exists. British government debt has never been paid off. It's been refinanced, rolled over, and expanded, but never eliminated. The debt trap was set in 1694, and every government since has walked into it willingly.
Okay, so good little clip there. Again, not perfect, but gives you a general. Again, it's a simple version of what went on, but it gives you the general idea. And I thought it was a good clip, so I wanted to run that. And I think it's good to run on occasion just to remind us. Okay, so here we've got the 10-year note. All right, speaking of the debt, and we'll look at the currency here in a minute. We've got this this 10-year note, harmonic structure. Okay, we just keep moving about this thing. We keep coming back down and testing this pink zone. This is the breakout zone. Now we've gotten as high as, I want to say we got as high as the 5/8 on this, no, the 6/8. So we got up in here, we got actually to the 7/8. No, 6/8. Right back in here. So let me clear these off so I can show you. So we'll look at this again tomorrow. I want to keep an eye on this pretty much every day, because when something gets this locked up, and usually it's ready for a big move. So I want to stay on this market, because I think it's setting up for something. Now, back in here on, what was this? October 17th, we got up to the upside 6/8. That is this right in here. Okay, right up in here. And then you can see all the yellow dots on here, reactions to the harmonic structure. And, there's more of them I'm sure we can draw. The point is, we come back down into this pink breakout zone, go sideways, and we've just been messing around with this nonstop. It's just hovering in here. If this thing tips over and starts to go to the downside, that means rates are rising. So that's against what this administration wants. And it sort of fits with what the FOMC is doing, right? We saw a 100% chance of a rate cut in December. Now we see a 43% chance of a rate cut in December. And the 50 is really a hard stretch at this point, the 50 basis point rate cut in December. We saw Paul Tudor Jones talking about that probably a month ago. We ran those clips. He thought we were going from a terminal rate of 3 to 2.5, and that would lead to a 50 basis point rate cut in December. Okay, and I kind of subscribed to that. I thought, okay, I think Moran could get this. I think they fast tracked him to the FOMC. We're going to be choosing the Fed chair. The Fed chair is obviously going to be, dovish, right? Willing to lower rates. And Trump administration's behind this. We've got people on the FOMC in trouble for mortgage fraud and this and that, whatever. So it was like a corporate takedown. It's what it felt like. And now we're seeing, a pushback with the Schmidt and a series of, and this is why we've been watching these FOMC members so closely to see which way are they going to flip. Okay. Now, this data, again, circling back to this data, just briefly, we've got all this data coming out. What's it going to look like? We have no idea. What are we going to get? We have no idea. Really? Are we ever going to get what's the gap going to look like? If we never get October data, what's it going to look like, on the jobs data? And how will they spin this? And who's going to win this narrative control? Because that's, to me, what it feels like. It's a control of the narrative. Now, that's why I think that this could resolve itself in the near future, this 10-year note. All right. And if we look at this thing on a longer term, we've looked at this thing over and over and over again, right? This upward sloping trend channel. Odds are that this is, still a downtrend, okay, longer term on this 10-year note. But on a daily time frame, that would be weekly and monthly, right? We're looking out years, 2, 3, 4 years. More than likely, these rates are going to go higher as a result of a sovereign debt crisis, a rollover to a new form of currency, a default on that debt that we were just talking about. The one way out is just default on it. Default on who? Who would we be defaulting on? That's what we would have to figure out. And then the question is, but in the meantime, does this 10-year note make a move up into that 2.5 to 3% terminal rate? And a lot of what's waiting in the wings is the data, the FOMC data, and the FOMC. We get FOMC meeting minutes out this week. I think on Wednesday or Thursday. I can't remember what day it is, but we'll get the FOMC meeting minutes. So I want to watch this 10-year note and the chance that maybe it makes a move here. Now let's take a look at this. This is the dollar. Okay, this is that new harmonic structure we have in here. We watched technically. Okay, we had that base. If the dollar climbed above a certain level, let me see if I have that. I think it's maybe it's on. Let's see if I have that. If it's, I think it would be on this chart if I have it. Yeah, here it is. Okay, so technically, we talked about these two purple shaded horizontal skinny rectangles, whatever, bouncing up against it, 3-4 times. It popped above, came back down and retested it, went above, came back, just came back and retested this right in here. Okay, again, what we thought was, a potential point of support, resistance, whatever, a sticky point. Okay, climbed above it, went to 100. That was a target, psychological target, came back off. Now the thing is potentially climbing again. All right, this harmonic structure. Can this thing, is it in play? All right, and I think it was this one. Yeah, here it is. And now we have this harmonic structure. Right now, this is good, right? As much as I just wish these currencies would go because it's been a frustrating trade with the Swiss franc, the British pound, Australian dollar, some of these things they're all huge energy builds. And maybe at some point we want to go through that and do each chart and just look at each one of them. You know, how each one of these is, other than the yen, each one of them is building a lot of energy. And if this dollar starts to climb above that pink shaded zone, it has the room to run on the upside to potentially 102, 102.50, 102.25. I would say 102.25, somewhere in that 102 to 102.25. That pushes these other currencies down, and they start to look pretty weak. Okay. All right. Now, keep in mind, we looked at this dollar last week and we compared that to gold. Can we see a move back in the gold market? A pullback in gold if this dollar starts to rally. And that was the case that I was at least throwing out there. It's a possibility. Dollar rallies, can gold come off? Okay. It's going to continue to probably put pressure on crude oil as well. So again, oversupplied crude oil market. Dollar goes up, a lot of commodities tend to go down. Not always the case, but generally speaking, that's the intermarket relationship there. All right. So dollar right now, just kind of building energy. This is good. Okay, it's good. Came back to the moving average. Okay, we got those little fan lines coming out from it, those purple lines. Probably not accurate right now. I probably need to redraw those, but we'll just leave them there for now. It's good enough. And see if this dollar can start to spend more time in that pink zone and start to make a move up. Okay, at some point. The longer it builds energy, the better off it is for us. This could be a pretty clean trade, even though it's a little frustrating out of the gate. It could be a pretty clean trade the way it's building energy at or near this. Now it's below a little bit, right? So you can see it went down below there a little. But we got to give it a little bit of wiggle room here. The key is it responding to this breakout zone? All right, keep rolling here. We've got, I want to look at this gold triangle. Let's take a look at that while we're at it. Let's look at this. Okay, here's gold. So we had these touch points on this gold, okay? And it goes way back, but you can see where this thing's coming together at this apex. All right, and let me just I'm going to put a little pink box on this. Let's make that kind of bright. There we go. Okay, so we have this pink box where these two trend lines essentially come together, okay? One from the bottom, one from the top, okay? And you can see I've got the touch points marked in yellow there, different places where it's pretty much reacted to it. And then back right here, we blew through, okay? We weren't at the it seemed to me that this move up in here was overdone or manipulated or something, okay? Or, just part of the process, okay? But there are too many touch points for this. We drew the first converging triangle. It didn't work. It worked a little bit. It gave us some good buys in there down in this area. It actually worked. It was off of this area down in here, right? We had a little triangle forming down in there, and it was pretty good. You can actually still see it there. I'll put it in there just for the heck of it. I think it was coming off of here and going through there, right? So you can see the touch points on that here. So obviously we get one here, 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 and then a breakdown, okay? And so this is, again, part of that triangle. All we did is expanded this triangle out, right? So this trend line, the lighter purple line, we just extended it down, right? It expanded out. And now we've got these touch points, 1, 2, 3, 4, 5, all right? And now we're approaching the apex of this. So my point is this. If gold gets to this apex, which is going to happen in, let's say, the next, somewhere between, let's just say, anywhere from 75,000 trades to, buys and, changes in price, trades, actual trades, 75,000 trades to the next 250,000 trades. So sometime today, sometime tomorrow, we get to the apex of that pink square. If price is below there, then maybe the trend is down, right? And we can retest that 3,600. I would say 3,600, and we'll see how it does if it goes there. 3,600 would make a lot of sense. 3,500 would be a little bit of an overrun, but it would also test prior resistance. Okay, so there's some technical stuff around 35, and there's some And I'll show you this. If this starts to break down, I'll show you what I'm looking at. When you get into these momentum markets, not all the time, but when you start measuring the momentum, there's a good chance that the market will come back to that point where the momentum really kicked in. All right. And so I'll show you that if it starts to work here, but I don't want to waste our time unless it formalizes. Okay. And then you'll get to see it then we'll get to see it in real time. That'll be even better than just making, well, this can happen. Here's a case where this can't happen. And people are like, okay, great. Like, I think people want a real example of it. And then I'll show you, right? So if price moves below that pink box, that means a trend could be down. There's a good chance it starts to open up the door, I should say. It starts to open up our chances of a retest at 3,600, maybe 3,500. If it holds above here, right, and if it goes down in there and creates like a little bit of a saucer bottom, right through this area, and kind of hugs this and holds above, then maybe 4,400 is still in play, okay, or 42, 44. Retest of this, a retest of maybe something up in here is in play into the end of the year. But what would that mean? It might mean the dollar isn't going to break out to the upside. If the dollar breaks out to the upside, there's a good chance that continues to put pressure on all these currencies and on this gold market. And that would shock a lot of people. 3,600 would start to scare people out of the gold market. So if somebody started buying back in here, right, it hasn't been a bad buy. All right. You caught it at, 10, 12% discount, right in this, 4,000 range. But you don't buy it all, right? Then it comes down into here, right? Good, dips a little bit more. Maybe you pick up some down in here, 3,900, right? What do you get? A rally back all the way up to this prior 4,200 low, okay? Right up in here. That's what we just got, was a push back up into 4,200, a little bit through 4,200. You could have unloaded some, right? I mean, that's what we were talking about in here, right? We were doing some buying down in here, okay? I unloaded some up in here. We were doing some buying down in here again. I think unloaded some in here, but didn't catch this gap across this triangle, right? I did not catch that. Once it started to get above, I started shorting it again. And I think late last week we saw, look, there's a good chance it's going to come back into this apex. Just because there's so many touch points, right? It's a gut feel. Some of it's just, watching markets. Some of it's just getting a feel for the sentiment. Where are people? During the day when you watch trade happen and you watch what they're trying to do, manipulating the market, you kind of get a feel for, I think this thing could come back and test the apex of that triangle. And that's where we're at right now. So let's just see what happens at this pink box, see if we break down, see if we hold up in here. This is kind of a tipping point, this converging triangle that we've been working on. We had our first one got revised, right? We had this first one back in, October 21st, somewhere around in there, we were talking about this, that area right in here, And then we revised it, it broke out to the downside, right? Looked like it was responding to it quite nicely, broke out, blew through, and so we're in a good position. It would be fascinating to see a 3,600 retest of gold into the end of the year. That would be fascinating to watch because people are going to run for the hills too. They don't want that on their books, right? So again, I think people have overloaded up on gold and silver, all right? And markets have a unique way of clearing. Even though people can create these stories about London doesn't have any silver, this, that, whatever, the world, gold, this, that. They can create a lot of stories. But the reality is, people vote with their pocketbooks and, in the markets and in other places, in a fair election as well, if we had them. The point is that let's just see what happens here. We're at the apex. I'm not going to make a call. I like the short side. I'm short this market a little bit. Once we get off the show, I'll start trading it more than likely, looking for opportunities to get short, see if it continues to work. If not, I'm going to try to minimize the risk and try to position for a breakdown through that apex. If it doesn't work, it doesn't work, right? We'll trim it, reassess, and go from there. Okay, keep rolling here. We've got, I think the only other one we really want to hit here is Bitcoin. So again, back in here, we had this gap. Okay, this was a big deal. All right, this gap's a big deal. We gapped from 77,000 to almost 81,000. So a $3,000 to $4,000 gap back in here. Okay, where that purple shaded box at, I just put that yellow circle. Let me just change this to green, just to make sure we specify that. Okay, so we had that gap where that green circle's at. And then we said, look, 100,000 is probably in the cards, right? It's a big psychological level. It's probably where Bitcoin's going to go, and it gets up there. Then it comes all the way back down, fills that gap back in here. So this is like, February of 2025, March of 2025, and then April of 2025. Then it makes another run at 100, blows through, comes back down, retests 100 a couple times. Okay, then it makes this move up, double tops, triple tops up in here, 1, 2, 3 times, right around 125 to 126. And now we're seeing it come back down. And, there could have been a trading range that formed in here. And that's what I was potentially thinking, that we put a trading range in here and maybe go sideways. Or you can do an accelerated way to come back into this moving average. So the real test at this point is probably going to be, we probably need to do a little more work on this, but I would say, 90,000 as of, let's say, the end of this year. So if it got down to 90,000 the end of this year, it starts to put people in pressure, okay? Michael Saylor with MicroStrategy. I don't know how many of you remember this, but we did a lot of work on this guy back, when we were still on LFA. And this guy's a wild man, and he's been loading up on Bitcoin, right? He's a great storyteller. At least he thinks he is. And he's created these concocted deals. And then we had, I'm trying to think of his name. Boy, a big short seller. And he came in and explained a trade that he was putting on, betting against Bitcoin, essentially, or betting against MicroStrategy, okay? And their strategy. Now, their average price is at like 77,000 in Bitcoin. So they say. But they've been buying at these higher levels. So their average price might be 85, 90. Markets love to go back down and try to free that up. So if the market could go down and force him out of his positions, guess what you get to do? You get to buy this stuff on the cheap, right? So if they could drive this into that 77 to 90,000 range, they might just force liquidation. And MSTR is a symbol. That's MicroStrategy, Michael Saylor. I wouldn't be surprised. This guy's got 650,000 Bitcoin, okay, that he's loaded up on. And he hasn't been a great trader. He's got a story, he's got a mindset, and anytime he gets capital, he's just buying Bitcoin, right? And we've talked about this, these companies that are doing this treasury strategy around Bitcoin, and it got, I would say, 4 months ago, it was pretty pervasive. A lot of people were talking about using it for like every these are what these guys were saying, right? Every corporation should be benchmarking their treasury holdings against Bitcoin, It's like, you're insane, because you can't run a balance sheet based off of a volatile thing like Bitcoin. You really need something like the 10-year note, right? To be quite honest, the fact that this 10-year note is just hugging the bottom of that trend channel, this is great for corporations because they have stability. They can deal with that. When it starts getting volatile, that's what they don't like, because now they've got to hedge, they've got to do this, and that's expensive, right? And they're stressed, so they don't want to So we have other issues than that right now. That's not our only issue. But that's what Percent's talking about. Trying to create growth, trying to create stability, seeing if they can't get something going in Q1 and Q2, right, from a growth perspective. And what would that mean for the 10-year note, the dollar, the stock market, and so forth? Oh, we need to look at that real quickly. Let's take a look at the stocks. I almost forgot on this. Okay, so let's take a look at this. So we've got this, again, still in that holding pattern, okay? We've got these two harmonic structures, right? We've got 6909 in the S&P. This is the one I'm watching the most. Remember, the Dow came back down below that 47,797. We looked at that on Friday. So it's below its full upside harmonic objective. And again, we didn't know which way it was going to go, okay? If it would have held that 47,797 or 48.2, we were talking about those two levels, there was a chance, there still is a chance, right, that the Dow could make a run at 50,000 in that big psychological level, kind of like we were just talking about with Bitcoin. Markets love to go for these things if they can. The problem is it may not be afforded that, because we've got NVIDIA this week. What's going to happen with NVIDIA? If NVIDIA comes out and has great earnings, maybe the S&P climbs back above the 6909, the Dow climbs back above that 47,797, the NASDAQ's off to the races, and now you get this big gun in the Dow or something for that 50,000, right? That big psychological level going into year end. What does that do to the dollar, right? That would change things. However, if NVIDIA doesn't do well, what does that do to the stock market? And you can see we're dead center between those two white dashed lines. Not dead center, but pretty much dead center between those two. So the markets, in my mind, pretty neutral between these two harmonic structures. And this is the one I'm watching. One, because it's the highest liquidity. It's a great place to be trading right now, is in the S&P 500. So is the Dow. There's no problems with the Dow either. I don't want to touch the NASDAQ right now. Just with NVIDIA coming this week and, all this stuff, I don't really want to be involved in the NASDAQ very much. It just doesn't feel that good to me right now. But the S&P, I can kind of, it still moves plenty fast. I mean, we're getting 100-point moves in this thing all the time. So there's plenty of there's plenty of movement, right, for someone who wants to trade this market. To me, the NASDAQ's just too squirrely. All right. So we can still use it as a reference point, right? What do we have? That 24,126 in there is still a level. Yeah. So we're still watching that 24,165, that white dash line. That was its full upside harmonic level. And then we've got this Dow below the 47,797, actually sitting at the old residual halfway. So it's sort of stuck in there too. It's almost at a neutral point, right? If we look at that old harmonic structure, it's sitting dead center between the pink breakout zone and the white dash line. It's sitting right on the dark green line. That's pretty neutral. Again, not perfect because it's a residual, right? So it's not a new harmonic, but they can have an impact, and it probably is. Okay, so back to this S&P. Yeah, I keep saying I got to clean, but it's pretty much dead center. I would say it's neutral. It's a good trading market. A break above 69.09, ball games change to the upside. A break below this 65.74, we got major problems. We're probably going from, I don't have that up, but I show this. Again, we show that wave down 1, consolidation, wave 0.2 to 0.3. Or would we get a second wave down? That we start breaking that 65.74. To me, that's a sign that's a second push down. Okay. And we haven't seen that. We get a one push down, we get a sideways, and then we go to new highs, or we go sideways. We haven't seen that second push down yet. That could be concerning if we go into the end of the year in that second wave down, because we could open up, into the World Economic Forum, Davos, into January, all this stuff going on, and we could potentially get things that go on, lots of Bitcoin coming off, risk off, right? Bitcoin coming off, Bitcoin attacking that 77 to 90,000 range, risk off mentality. That would push the 10-year note higher, right? Which is what the administration wants. So they probably wouldn't, they might just say, hey, look, let's let the stock market go for a little while. And, back to that clip with Scott Bessent saying we want to make it good for Wall Street and Main Street. Well, how do you do that? I don't know if we can actually achieve that right now. I think you kind of have to pick Main Street or Wall Street. So maybe you sacrifice a little Wall Street for a little Main Street, and we get that second push down. So again, I'm just running you through my thoughts, where things are at. Continue to use these harmonic structures. I'm going to update these, go through any new signals that we may have for this week. And then tomorrow we'll come back, look at the debt, Wednesday energy, Thursday equities, and Friday come back and take a look at some commodities as well. All right. With that, I think we can wrap it up. Have a blessed day, everyone, and we'll see you tomorrow. Thanks.
Told you, baby, one more time. Don't make me sit all alone and cry. Well, it's over. I know, but I can't let go. I'm like a fish out of the water, every cat in the tree. You don't even want to talk to me. Well, it's over. I know, but I can't let go. He won't take me back when I come around. Says he's sorry, then he pulls me out. Got a big chain around my neck and I'm broken down like a trailer. Well, it's over. I know, but I can't let go. See, I got a candle and it burns so bright in my window every night. Well, it's over. I know, but I can't let go. You don't like to see me standing around. Feel like I'd be shot when I didn't fall down. Well, it's over. I know, but I can't let go. He won't take me back when I come around. Says he's sorry, then he pulls me out. Got a big chain around my neck and I'm broken down like a trailer. Well, it's over. I know, but I can't let go. Oh, check it out. Tennessee. Brings me right back how it used to be. Well, it's old, I know it, but I can't let go. It won't take